I'm Mark Silverthorn. I hope you enjoyed this video.
Hi, my name is Preston Watson. I am the founder and president of Watson Capital and Consulting. Within Watson Capital, we do a lot of consulting for existing payday lenders in the province of Ontario and British Columbia, as well as we help those who are looking to enter the payday loan market who are new to the industry in general. When you look at any business or industry in Canada, there's always going to be pros and cons. When you look at the payday loan industry, for example, there are three pros, I would say, that come to mind. The first one, obviously, is that payday lenders can provide cash quickly and easily to consumers when they need it most. Somebody who's stuck on the side of the road with a broke down car, they're able to simply borrow from a payday lender at any hour of the day and receive funds in their account almost instantly. When you look at the borrowing process, the process is very simplistic, such that the consumer can log on to the lender's website, they can apply for a loan within 2 minutes and receive funds in as little as 10 to 15 minutes. By going into a brick and mortar store, there's usually not a lot of lineup, and as a result, they can apply for a loan within 5 minutes and walk out with cash instantly. At the same time, the payday loan business offers a custom tailored customer experience where the consumer can walk into any store and there's a good chance that either the owner of the mom and pop shop or the branch manager of the larger store they already know who the client is and they can anticipate their needs, and as a result they can provide service much better than they might be able to find elsewhere. Now, when we look at the payday loan industry, there's obviously cons as well. Myself, as an active lender, you would probably be surprised to hear me talk about the cons of the industry, but I am, and there are three that come to mind. The first one, obviously, is high cost of borrowing. It's no secret that payday loans are expensive. Even when this is communicated with consumers upon their application, they still are okay with the rate itself. There's a small percentage of consumers who do not understand the rate at all, but the majority do understand what exactly it is they are borrowing and how much it will cost them in comparison to other credit products that may be available, although not necessarily accessible to them. Payday loans are expensive. They are an absolute last resort when it comes to borrowing money, period. Secondly, like any profession or industry, there's always going to be bad actors, and the payday loan business or industry is no exception. At the same time, the payday loan business has a negative connotation that we are loan sharks, which is not true. Payday lenders, for example, were not allowed to be advertising on Facebook or Google. We're prohibited by the terms and conditions of those advertising platforms. We are not at the colleges like credit card companies trying to entice people to sign up. We're not in grocery stores handing out bags of cookies to people who fill out a credit application. Our service is well known to the consumers, and if they need our service, they know that we're there for them. Unfortunately, the industry has such a bad reputation that even friends and family of lenders who I know, their family sees them as loan sharks, which is simply not true. We are there to fill a gap in the lending market where consumers have no alternative for a micro loan, and that's why they turn to us, the payday lender. I would say the third con of the industry is the handling of accounts receivable management. When you look at the collections treatment path that some lenders follow, and again, not all, but some lenders follow, they don't follow the regulations that might be set out by the provinces in terms of the number of calls that can be made to an individual, the language or the tone being used, which ultimately is unnecessary. So lenders ultimately need to make sure that they maintain their ethical guideposts, or if they don't have them, then it's a matter of, looking inside and finding them. And ultimately treat the customer like a friend. If you lend a friend $200 and they don't pay you back as they agree they would, what should you do? When we look at the payday loan industry in Canada, there are a number of cities who are restricting or capping the number of stores who are allowed to operate within their territory. And we're going about this the wrong way. We need to ask ourselves, why are payday loan stores popping up everywhere? How can we reduce the number of payday loan stores? And in any business, you always identify the root cause and you fix it. The root cause in this case is, one, debt, the amount of debt that consumers find themselves in, and largely with credit cards, lines of credit, and car loans. They're borrowing far much more than they should, given their amount of income. However, the government has done nothing to limit that. When we look at payday loans, a payday loan of $200 or two payday loans of $300, it's a drop in the bucket compared to everything else that has been poured in. So we need to look at what is being done to educate consumers so that they do not fall into the debt trap in the beginning. We know that financial literacy is a part of the high school curriculum here in Ontario, for example. I don't know what is ever actually being taught in this regard, but I know budgeting is a part of it, and I hope that is being done. When we look at colleges, students that don't have money are being enticed to fill out credit applications to get a credit card, for example, which they don't need. When you look at consumers who are already in debt, I can see by reviewing the banking history of thousands of applicants that I've seen over the years, they're spending money on things that they shouldn't, and they're luxuries. We're talking designer clothing, dining out all the time, alcohol, cannabis, gambling or betting, and these are just unnecessary things. Why are they doing this? Now, with that being said, not all consumers who are in debt are falling into this category. There is the percentage of consumers where life circumstances has put them in a position where they simply can't afford things anymore. But that's not normally the case. It's usually complete lack of financial mismanagement. So what we need to see is a change from somebody in terms of financial literacy across the country. We have the FCAC who is in place, but as someone who actively searches out and reads and researches credit, debt, and collections in Canada, I rarely see anything from them. So I don't know if they're targeting the correct demographic, or if their message is even being heard, or if it's even being put out in a format that is going to be heard by their targeted audience. There's a lot of fingers being pointed, whether it be lenders pointing at someone else, trustees pointing their finger at someone else. If you look at government, if you look at consumers, the bottom line is there's a lack of financial literacy amongst consumers in Canada, and as a result, debt is ballooning across this country. Someone has to take charge. Someone has to do something in order to fix the root cause. Otherwise, all we're going to continue to do is put Band-Aid solutions on things where a Band-Aid simply won't do. We need stitches. We need to solve the problem and fix it once and for all.